Good morning, it's Jonathan Barratt with this week's Market Buzz. And the markets certainly are buzzing. Donald Trump, okay, let's see. We'll talk a little bit more about this later, a little bit more in depth. But we have a government shutdown in the US. That basically means that the government's spending more than it's actually making. Bit of an issue there, I think, across the boards. Also got the Dow continues and the S&P continues to have their record runs. ADB employment came out. That shows job cuts at 32,000. A little bit negative there on that front. The RBA provided their financial stability review. Everything seems to be okay on that front, so that's not too bad. And we see oil's remaining volatile, under a lot of pressure at the moment. Whether that's economic or just more supply, we think it's more supply, particularly coming out of the OPEC discussions that we've just recently had. Gold set to record highs. In fact, we did touch them today in Asia trading. And also silver getting very close to that US $50 an ounce. Okay, so lots on. Let's have a little bit more of a deeper dive into what's happening in the US at the moment. And I think it's a very interesting thing. It's the US government shutdown. Basically what that means is the government is spending more money than it's actually making from taxes. Essential workers are still on tap, but it means that there could be a lot of layoffs. When you look at the size of that government deficit and how it grows, it's always a contentious issue. But when we're looking at numbers in north of 35, 37 million dollars, it becomes a major issue. Purely because the governments use it as a means to look for their own political suasion. And I think when you look at this, the longest shutdown we've had was actually when in 2018, 2019, where it lasted for 35 days. Now, guess who was the president there? Donald Trump. Now, Donald Trump has learned from this experience, and obviously he was delighted by it in news press just on the 2nd of October, where basically it gives him an opportunity to increase his presidency powers, and also to get rid of a lot of federal workers. So he's actually going to use this as a ploy for his own gains. That's what he's like. And as a result of that, I think it's going to create some instability. And I think that instability will come back to the markets. Time will tell on this. As I said, the last one was 35 days. Because Trump understands how he can use this, I actually feel that he will use this to his advantage. And as a result of that, who knows what will happen. And I think if it continues to move on, then or the administration or they can't resolve the issue, then that will creep into an already weaker market. Now, I think the most important thing here, when we do look at this weaker market, in the last couple of weeks, we've talked about inflation, we've talked about the Fed, we've talked about consumer sentiment, a dovish tone. Now, remember the dovish tone, this is not about a relief. This is all about trying to rescue. Rescue the economy from overheating. And that to me is the concern. The ADP data, and I use that data, the employment data there, down by 32,000. We didn't get the employment data we needed. That was due to the shutdown. So we're seeing a bit of a blackout here in terms of some of the numbers and really understanding what's happening. So it remains a bit of a concern, and which I feel will move into a bearish market. Let's just see. I have highlighted in the S&P. We are short, but we'll talk a little bit more about that later in some of the charts. But if anything there, I think this will sort of aid, I guess, any readjustment. Now, there is a lot of talk about a bubble, an AI bubble just in realization in prices, which we do see as well. So this could be something that sees a market coming to correct. So anyway, let's see what happens. Obviously tonight will be the first sign of this, and we might get some fallout. We in this week's buzz, we've sort of focused on the S&P from the fundamental and technical side, so that'll give us a little bit of insight as to what you're thinking. We are still bearish of the markets. Okay, now this week we've got a few things going in. Obviously the shutdown, that's some of the focus. We've got deadlock in terms of delays come in, so there's going to be lots of issues there. As I said, we had the postponement of the September jobs report, so there'll be other key data which will be an issue. But the US, I think, will be a bit of a blackout. Let's see what happens on that side. And I think that, to me, is a little bit of a concern. In Europe, we've got some good data as well. Industrial production figures from Germany, Italy, retail sales from the Eurozone. But as we know, they're all a little bit depressed over there. Still don't know why a lot of these markets are on record highs. Time will tell, but let's see what happens. There's the S&P, as you can see. It's extended. It's red hot up the top here. Great divergence here. That tells me the highs are getting lower. So I would expect to turn around pretty soon. I think 66.50 is where we actually feel if we do get a turnaround, then that should be where it starts. 66.50. See all these momentum indicators turn around. If they turn around, then I think it's down she goes. So I do think that we're getting to that area where we will see market prices lower. We'll look at the Dow. It's a similar story on the Dow. And as you can see there, right up those top levels, this could be a blow off at the top. Let's see. Still can't understand why it's at these levels. It's been a bit of a contentious issue for me, but I do think it'll turn around. The most important thing about here is when you are a trader, you've got to know when you're wrong. You've also got to know the size of your account, particularly when you're trading some of these markets, particularly in leveraged markets, because you've got to manage the position so that you can be ready when things change. You might be wrong, but eventually you might be right. So it's really how you trade and how you master how you are actually trading. We've had a wrong position here in the S&P. We were caught out. We're still monitoring it. It's now a manageable size, and we will get back in when we see a turnaround occur. So as we say, keep your powder dry. Okay, now looking at the local Aussie market, potential double top here. Let's see how that unfolds. But I do get a sense that, where are you there? A double top up here, around that 9,000 level. I don't really understand why it should be through there, but I do anticipate it to come back down to this 8,700 level. So, we are getting momentum indicators starting to turn around. So I see equity markets just living on a bit of time like that at the moment. Okay, let's look at the West Texas oil. Obviously under pressure. This whole move, in my mind, is a breach and pullback. I've been following that for some time, and we are at these lower ends where OPEC coming out, increasing their supply, only makes sense. And if the economy doesn't pick up, it also makes sense for a bit of a more consolidation. I do feel that's today. I do feel bullish down around these levels because I actually think at the end of the day, she will start to trade higher. Okay, now moving on to gold. Gold record highs again today. And there you can see it, just keeps on going. What a fantastic trade that's been. We took some profits last week, and we've still got smaller positions on. I do think that after such a move, that we are in for some consolidation. I do, however, want to point out this particular structure. I'll just get this. This is a breach and a pullback. If you see these types of chart patterns, they're always very, very positive for a breach to the top side. And this has been a classic for gold. And as you know in our reports, we've always waited for that break. It has happened and it's turned into a really terrific trade. So keep an eye on those ones when you see them. The Aussie dollar, as you can see, going sideways, just still with momentum indicator. So if anything there, I think she just continues to go sideways. But at the end of the day, I think it will actually push onwards and upwards from here. I do like that. I just like the formation of the Aussie. So everything is good there. Euro, we've got that small trade on, which I like as well. At the end of the day, I think from these highs, she should come back. There's no reason why it should be here. It'll be a strong Aussie dollar. Let's see what happens from there. But really, that's about it from me for this week. It's going to be a fascinating week as always in the markets. Be safe, trade safe, and we'll talk to you later. Bye for now.